The local bond market is on tenterhooks. This ahead of S&P Global Ratings and Moody's announcing their credit rating decisions on South African debt later today. Currently, S&P has the country's foreign currency debt one notch below investment grade and the local debt category one notch above investment grade. Moody's has both the country's local and foreign debt one level above junk status. Now, if both agencies downgrade the local debt category, market observers say that foreign investors could sell off up to $12 billion worth of bonds over the short term. Such a sell-off would mean the immediate devaluing of the local currency, which would have negative implications for imported inflation. A move to downgrade the country's debt rating would ultimately mean it costing more to borrow money in the financial markets. For more on this, I'm joined by Klanti Pai from Nascent's Advisory and Happy Ngale from Alexander Forbes. Thanks so much for your time on SABC News. Klanti, perhaps I'll start with you. Before taking a look forward what's going to happen later on today, Fitch coming out with a surprise announcement yesterday.
Look, I think in some sense, it shouldn't be such a surprise because I suppose whatever action they take, especially if they downgrade, tends to exacerbate the problem. It's almost one of those things where if you downgrade South Africa, you actually lead it to the place where you're actually afraid, because ratings are really about an indication of South Africa's ability to pay and willingness to pay. And so if you downgrade us, obviously, you bring the problem forward because it will immediately cost more in terms of our debt. And certainly lots more people will not be willing to actually, give us more money and that sort of thing. And so you almost actually lead us to the problem. So in some sense, I think there's a lot of caution, to say, well, let's give South Africa another chance. Okay.
Happy, when we hear about credit ratings agencies and we're hearing terms that sound quite complicated to someone who's not an economist, people say perhaps it doesn't affect them as much and South Africa can be downgraded because it's not going to affect them on a day-to-day level. Is that a correct assessment?
That's not a correct assessment. It will definitely affect everyone in the country. So if South Africa gets downgraded today, we might see the exchange rate between the rand and the dollar falling. And if that happens, then we're going to see that interest rates are going to go up. And that affects the payments that you make towards your debt, such as housing loan and personal loans.
Mm. Yeah. Happy, speaking about the exchange rate, Nedbank coming out earlier on today and saying that if we get a double downgrade, South Africa could be at least 17 to the dollar.
It's quite scary because actually that is exactly what we will face, because we see all this capital flowing out of South Africa. Remember, our exchange rate really is people's appetite to buy the rand, to buy our bonds and even the products that we produce. So if we downgrade it, people then stop buying our bonds or our investment products, and therefore money actually leaves. So you see the demand for the rand falling, and we know demand supply, so then the rand will tend to collapse, especially if we lose that kind of money.
Mm. Happy, what can we do as consumers in South Africa to try and cushion ourselves from any possible negative effects that could come out today? We're hopeful that, as Klanti is saying, maybe people will give South Africa a chance. But if not, what do we do to cushion ourselves from these repercussions you spoke about?
Well, you have households where people are able to put some money away for investments on a monthly basis. And for such people, I would say stick to your long-term investment goals. So don't be emotional about whatever decision you're going to be making for now. And at the same time, you could also, if interest rates then go up, take advantage of the high interest rates by putting some money away into a short-term savings plan. But for people who are unable to put some money away for investments, it's going to be important for them to make sure they secure their financial well-being. And they'll need to start reviewing their budgets, if they have budgets, and perhaps also stick to the budget, just to make sure that you don't overspend. Because, if we do get a downgrade today, you'll notice that a lot of people are going to start losing jobs, probably no salary increases as well, but prices of goods and services is going to continue to increase, and you have an increase on one side, but at the same time you're not getting a salary increase. So just stick to your budget. Yeah.
You spoke about Fitch almost giving us a chance and waiting to see what will happen. They didn't do that with Namibia, downgrading Namibia this week. Is that going to have any effect on us in the short term, medium term?
Not really. I think that, we're both very independent countries. And I think the interesting thing, of course, is that it would have been different because given that, Namibia's exchange rate and South Africa's exchange rate moved together, I suppose for them it would be negative if we were downgraded. Perhaps that's where this is going. Maybe it's a signal that actually they are thinking about downgrading South Africa because then that would affect them almost directly. So there isn't any of that at all in terms of us being affected, except if it signals that South Africa's outlook is negative, and therefore they read that, given the relationship between South Africa and Namibia, they read that they should actually do something about Namibia. It just so happened that they started there rather than here.
Okay. It's not exactly directly related to downgrades, but it's on the point that you just made about if you don't have investments or if you need to almost consolidate your spending, take a look at your budget and don't be as extravagant. We're seeing Black Friday today in South Africa. It's not a South African concept, but it is picking up steam. We've seen people pushing, running around in trolleys. How do you balance that thing where retailers are saying to consumers, we're trying to give you a chance, we're trying to give you low prices, come in and spend, with what you've just said about consolidation?
Look, Black Friday is not something that people start to know about in this month. People know from January that eventually towards the end of the year, we're going to have Black Friday. So if you can just start from the beginning of the year to save towards spending some money on Black Friday, that would be great. But at the same time, spend it on things that you actually need with the money that you actually have. Yeah.
Kanti, earlier on we were saying that there's estimates that there could be outflows of billions of dollars if we get downgraded. Without being hysterical, because we might not get downgraded, is there something that can be put in place where you say to people, even though we're downgraded, it's not okay? What are the rules around South Africa if we get downgraded further into sub-investment grade?
Look, I think this is a discussion we've been having for a very long time, and really it's as simple as there are things that we've got to do, not just for ratings agencies, but for ourselves. How we manage our economy, how we create employment and jobs, and we make sure that the budget is balanced, that we collect the kind of revenue that, all of the things that we've been talking about as South Africans alone, without actually anybody coming in, are things we should have been doing, and that we will still need to do regardless of a downgrade. I think the downgrade perhaps, puts us in an even worse situation than what we are now. So the point is really to do the right kinds of reforms, in terms of how we manage resources, to stop the leakages that we've seen in terms of the budget, to certainly put into action the programs that we've talked about, whether we're talking about infrastructure, whether we're talking about training for students, whether we're talking about working together between business and government and labor to make sure that we are moving forward. What has been our problem, and which is actually part of the reason we will be downgraded, is because all of those reforms, all of the actions that we should have been taking all along, we haven't done. And so that will still need to be done. Perhaps now it will even be worse. I think it was interesting to listen to the Minister of Finance a day ago, so when he was talking about cutting expenditure, trying to fill in that 50 billion rand gap, and he says, there's a chance that there will be a 40 billion rand that will be made available to plug the hole. This is work that we should have been doing. It seems now we have to do it because otherwise we will be downgraded. But some of the work in terms of how we manage our finances is something that we should have been doing. The discussions that we are having now is work that we should do for ourselves. Because even if we get downgraded and these guys leave, we still have to create employment. We still have to invest in poor people. We still have to invest in education. We still make sure that our policies make sense and that we attract investment. All those things are things we still have to do.
Antipai and Happy Ngale, thanks so much for your time on SABC News. That is a wrap from the News at One team. We're back tomorrow. Thanks so much for joining us.